Monday, July 22nd, market analysis. Stan Ehrlich, good morning. Almost exactly 10 o'clock California time. And I start out with the indexes, go to futures. I got a little crypto. Sometimes I go to sectors, forex, cycles, seasonals, maybe a couple other things. Now, the E-mini had a sell signal on July 11th. These signals, ER signals, are frequently part of topping out or bottoming out formations. And as you have seen many times, they are the top or bottom exact day. I can't tell when they happen, the day they happen, that they're going to be the highest or lowest day, and the trade's going to work great. But I can tell you that when we enter those trades automatically, it's an automatic trading system that can be adjusted to your personal preferences, turned off, turned on, of course. You can use it for your own purposes, whatever. But if you use it the way it's intended, it will take a loss relatively quickly. When the rules are violated, then that loss is meant to be very small and handleable. The profits can be, and they have been, and in some cases, I think I've got a couple that are going right now that are just gigantic, really great. Now, so this is not the highest high in the E-mini, but a couple, 3 days later, it topped out and is now on its way down. And I think we are on the way down in the indexes. And I think we're going to be going down for about 2.5, 3 months into the month of October. Historically, the October lows for the S&P 500 Spider have been 90+% of the time profitable since 1997. In the months and weeks to come, I'll show you the graphics, the chart, the history, like I did last year and the year before that. So you will gain confidence in the October lows. And I can't guarantee they're going to work again. After all, they goofed up 3 times in over 30 years. And that was just barely earlier than October, a few days or a day or two after October. So it's a very, very powerful seasonal. Don't forget that. We'll see what happens this year again and again and again. So I'm on my way down, I think, for another 2.5 months into October. August and September, sometime in October. First stopping point, we didn't stop. And that was going to be around 55.90 or a little 55.88, I think I was saying. And that was Thursday of last week, but it closed above it. But Friday, it dropped off a chunk more, new low close. Now into the trading range we had around the middle of June to the beginning of July. So the next support area is now 55, call it 55.00, give or take a tick or two. And we're coming close to it pretty quickly. No new low yet today. And as you can see, the E-mini at the moment is trading quite a bit higher, almost 5 full spider points, which would be 50 points on this E-mini. So 48 higher for 4.8 if you want to convert the decimal point. And challenge the high of Friday, but not going anywhere yet. And I can accept a little bounce after the market went from overbought 1, 2, 3 days later all the way down to 35. That's a pretty big break on the RSI. So a day or 2 or 3 worth of modest bounce is acceptable. By the end of the week or quicker, I expect new lows. The 1 minute chart on the E-mini, we have established a little bit of a range here for a couple of hours and not even above yesterday's highs, although it tried Friday's highs. That stopped it almost exactly. So we'll see what happens. Again, a little more strength is not going to change my mind. Next, Spider, SPY, the father, same sell signal, couple of days early, overbought on top, gapped down. Now remember, gaps are almost always closed on the old-fashioned daily charts. Didn't mean to do that. Sorry. Here we go. And there is the gap, and it could get all the way back up to 562.20. Now that would raise my eyebrows a lot about a long-term bearish, or bearish for 2 or 3 months. Not long-term, sorry, intermediate. But I have to expect there's a possibility of that happening. On the other hand, this looks like a breakaway gap to the downside, and those are the gaps that are the least likely to be closed, but they're still kind of likely to be closed. Now we'll go to the spider, 1 minute. No big deal. Qs. NASDAQ. Very important, because the Qs have generally been leading the way up and down, going up quicker, faster, better, holding better, gaining more ground, just doing a better job of bigger swings. Got overbought and just barely missed a bearish engulfing red ER sell signal on the exact high day, July 11. Keep that date in mind, 7/11. And we hit the first support area on Friday very accurately. So we're bouncing a bit today. Minor new high, no big deal. 1 minute chart, not really showing us anything particularly important at the moment on the QQQ. NASDAQ, the index of favor at the moment, sell signal on the exact high day, July 11th. Trading hours are different, permitted for a higher high because of the longer trading hours on the NASDAQ as opposed to the QQQ. And great trade in progress. Came close to getting stopped out using the kickers that I'm using. And I think I expanded the kicker a little bit or slowed it down a little bit this morning because it was getting too close. And I don't really want to get bumped out at the moment. And that's something you can do. I wouldn't move it a lot, but a little in this case. So we're still in the trade, doing fabulous. This is an ER3, and it is short near the high of the day after 7/11, which is what ER3 does. It gets into the trade after the signal day. ER1 always gets in on the signal day, the red day or the green day, green being a bullish signal. Next, here is the ER3. I just showed you on the daily, but it's on the 1 minute. And this is actually a 5 minute. The rally got a short, pretty close to the high. And we are still hanging on to the trade. Same kicker, same chart, just much more detail. And the YM Dow Jones on Thursday gave us a sell signal. Not 7/11, but 7/18 was the date. Working fabulously. This is an ER1 overnight. So it got short exactly where the ER1 scalp got short, both of them. I think I've got them both in the next chart loaded and showing, we'll show to you. And it's still in the trade given the kickers that I've got running at the moment and doing great. Now, the Dow stayed more bullish longer. In fact, really weird situation. For several days, the Dow was going up and making new highs day after day and new historic highs, while the other indexes were doing either nothing, like the spider caught in the middle, or the NASDAQ going down at the same time. So the Dow finally caught up, had the bearish reversal, and is doing great. This is the detail for the ER1 scalp short on Thursday. Small day trade profit, not bad. Not great, but still profitable. And the ER1 overnight position is still short now in the second day after the entry on Thursday, a day after Friday, did great. Today, sideways, a little bit less profitable. Stop is right there. So it'll turn out to be a great trade if that stop is hit. Next, Russell. Daily data, it looks like short term, but it's daily because I've got such a huge amount of data loaded. You can go back to November of 2020. So we're talking 3.5 years. The point here is major, huge resistance. Didn't stop it like the Dow Jones. Both of those went screaming higher. while the spider went sideways and the NASDAQ went down. But it did get very overbought, hit a historical resistance area, and now I'm expected to come down almost exactly to where today's low is, but that's the beginning. I'm really looking for a retracement down to approximately 21.21. And the Russell short-term 1-minute chart, 5-minute chart, sorry, stopping at a little bit of resistance. Bonds, down quite a bit in bonds. Looking at a very long-term chart here, daily data, and I'm expecting more weakness, firstly down to 117.5, but I'm not so sure that's going to hold. It might. I'm not very bearish. I don't see any reason to get super bearish. We might get down to 115.5 or 14 flat, but that's about the most. 10-year notes, same story. I don't think I can justify being more short-term reactionary or bearish down to around 109 and maybe 107.30, call it 108. So modestly. And during the next few weeks, maybe a couple of months. So this should be a zigzag, slow, sideways to lower kind of decline. Next, I know everybody's looking at September for the next rate break because the Fed hinted at that or mentioned it already. And I'm not surprised if it's going to be September. But markets move on anticipation, and it knows September now for several days, and they reverse on realization. Again, markets move on anticipation, what's coming next, and they reverse once it's happened, and it's already built into the market. So it already moved up or down because of the expectation. Crude, new lows, weak, below Friday's lows, which was a new low in itself, broke support, not holding. I'm looking for 75 now on the downside. Natural gas got oversold almost at my minimum downside objective, which I've been talking about since approximately the end of June. So for all practical purposes, that's said and done. I think I should call it a successful objective, just missed by a hair. Big rally today, strong. First objective, as I probably mentioned on Friday, 2308, but that's fairly close and easy to reach, but it still could stop the rally. This is turning out to be a bit of a bear trend, persisting over quite a bit of time. Rescale. I am not looking for a rally way up to 3.2. Maybe again up to 2.3. We're almost there. And I can't rule out something a little better, 2.4. Next chart. And then down. Heating oil. Hasn't made those long-term lower lows yet, but we broke support. Trouble is we're a little oversold at the moment. So any time now, we might rally back to the resistance area, which is exactly today's highs and approximately where we're at right now. So a little bit more of a rally could very well be in order 2.5. But I think it's going to turn around and make lower lows again. I don't think it's ready to make a rally that will challenge the highs that we saw on July 5th with a bearish ER sell signal on essentially the top of the rally, almost the highest high, but we are still short. There's the green trade line. There's the trade. There's our trailing stop, our STS stop. Well, wait a minute. Come on. There we go. That's the stop. So I've got a great trade from the top of the market going, and we made a new low for the trend today, which lowers the stop. Great. Gold, silver, platinum, copper. And you're going to want to watch the silver and platinum carefully. Gold got overbought again, got up to a bullish resistance line, bullish because it trends upwards, resistance because you're trading below it, and that it's meant to stop rallies, and it did. overbought conditions stopped the rally last week on Wednesday. And today we have another. Every day since Wednesday of last week at the line, we've got lower lows on Thursday, on Friday, and today. I think the market could very well come all the way back down to this support line, which is almost perfectly horizontal, not quite, at 2305. That's my objective. If you break below that on a closing basis, I'm looking for 21 something. Silver, rare, very rare. Now, because I've been at this for over half a century, I've seen some of these. I've got to say probably less than one a year with all the markets that I look at, which is a lot. Now, and I look at a lot of stocks, individual stocks too. The silver has a head and shoulder top, only took about 2 weeks to make, and is by itself a shoulder on the larger head and shoulder top I have been talking about forever. It had a minimum, the small pattern that created the shoulder had a minimum downside objective, which was fulfilled on Friday, and we made another lower low today. But we're not quite yet oversold. Getting closer. But we did come down almost exactly to the lowest low after the head and before the shoulder, which would be another bearish breakout if we can start closing below 28.90. Yep, 28.905, which it bounced off of. So, not great. But we have also already closed under the neckline of not only the little pattern, which was the shoulder, and that has been fulfilled. It took 2 days. It was great. Easy peasy, easy money. But now the big one's in progress, and the big one says we're going to go down to 24.07. That's a different story. That one we broke out of on Friday on a closing basis with a large down move. Great. Now remember, after the breakout, you usually have a couple, 3-4 days down. Second day down today. So far, so good. Tiny bit higher at the moment. I don't care. The point is, it should not rally more than touching the neckline on the bounce back up, which for today, 29.9, well, I'll call it 30 flat. You're allowed a little bit of leeway, a little bit of error. But basically, don't close above the neckline at this point. Close below the neckline. We don't have to get up and touch the neckline. We should be getting up about halfway from the lowest low to the neckline. And actually, today's low and high qualifies for that. So the rally could have been intraday, and we're ready to go down to new lows already. I'm not quite sure about that. On a daily chart basis, yeah, a little bit more strength for a short period, but I'm bearish. Platinum has done the exact same thing. Very rare pattern. And with the platinum, we got the top of the market with an ER sell signal on May 20th. And you know it. I said so on the day it happened. I showed it to you. I told you it could be a major top. They not always are that important. This one is turning out to be a whopper. The downside objective is now, because of the bigger pattern, all the way down to 807. The little head and shoulder top, which is the last shoulder high by itself, still has a minor downside objective at 928 and is already a little bit more than halfway there, with today's low being a new low. What the hell can I tell you? The silver and the gold patterns are working great so far. No problem at all. Copper got overbought, had a bearish engulfing, almost, not quite, and came down to support, got oversold. Support didn't hold. With gold, silver, platinum heading south, another metal, copper, although there's not the same kind of relationship of precious metals, it's still being pressured, and it made a new low, and it's now well below the support area. So I think the next stopping point down is 3.9. Next, beans, oil, meal, corn, wheat, cattle, hogs, crypto, Bitcoin. Bean oil held well for a few days in oversold condition and is bouncing. As I've said for several days now, We might be able to get back up to about 1104, and I can't refuse, or I can't rule out 1143. But this is a bear market. I don't think we have a major bottom. A minor one is starting to proven to be correct, and a minor rally in a long-term bear market. You have to realize that this is new lows for a whopping period of time, multiple years and a half, 2.5 years. Bean oil, a little perplexing. There's a bullish formation that I don't think is going to work out correctly, but I'm stuck between a rock and a hard spot. Can it rally up to 48.77? Then maybe it'll be 49.90, but that's the levels at which I expect it to stop and turn down. Above that kind of changes the story. On the downside, if it starts closing below 44, and especially if it closes below 41.80, then it will break this big bullish formation and it won't exist anymore, and it'll be long-term bearish. And soybean oil is not too far away from new lows for a very long period of time. That low was in December of 21, so 2.5 years, and maybe a lot more than that if it'll go below 33. Next, meal. Already had a minor intermediate breakdown a little before last week. Last week, you had downside follow-through. You've got a rally now up to the resistance area I talked about for a few days. Come and gone. Done. Will it come up even more to 8.5? Maybe. We're not overbought. We're not oversold. We're pretty damn neutral at 56. I can't rule it out, but I'm not bullish. I'm looking for new sell signals. I'm looking for new reasons to go to recommend short positions again. Corn, like beans, have already broken out to the downside weeks ago. Major long-term breakout. Huge. You've got to go all the way back to April of 21 to see levels below where we are. This is very bearish, intermediate to long term. Wouldn't be surprised if it lasted all summer long into the fall and even more until I get some reasons to believe that the market's turning up. I can't say anything different. Very, very bearish long term. Now, yeah, on the way down, I'm probably going to get periodic buy signals. On July 12th, I got a buy signal. It did kill a signal the next day, but we have no follow through. So that signal is now maybe part of the bottom, which is not a big one, small one. Can't get very bullish. Looking for a rally up to 424, maybe. And that's corn. So I think maybe we're going to have that rally. I need a little more strength. I'd like to close above the high of the reversal, above 404, and then I can forecast 424, a little more confidence. We're looking at wheat. It has done the same thing. And then that was July 12th, major long-term historical bearish breakout. Lowest levels since we topped out on the 8th of March of 22 when the war started. So we're looking at a buy signal on Friday. That changes the picture for the moment. I cannot sit here and tell you that's a major bottom long term. Too many things are problems at higher prices, which on Friday it already reached in a single day the first resistance level. So far today is a doji. Let me move this out of the way a little bit for you for the moment. And we didn't make higher highs. We didn't make lower lows. We're up a little on the day at the moment. Nothing big deal. And that could have stopped the rally. And now we're going to see new lows again. And the signal's not very good. The scalp version probably made some money on Friday's trade. The overnight is probably break even at the moment. So I need a strong close in order to look a little smarter with this particular symbol and signal. So a rally up into the 590 would be fine for me and not change my long-term bearish opinion. Next, cattle. No big deal. A little bounce, resistance. I'm having trouble coming up with an answer as to what to do with cattle lately. I'm going to pass on it again today. Sorry about cattle. And Miss Piggy, kind of in the same category here. Not too sure about this. A little rally today into resistance like last week could stop it again. But that's about all I got. No overbought and oversold, no gaps, no support resistance of any consequence. You're between a rock and a hard spot. So I think it might even dribble back down again. And hogs. Miss Piggy trying to rally up to resistance, not quite there. Did I get a couple things confused here for a second? That's cattle for sure. Yeah, I'm okay. That's sweet. Good. So Miss Piggy could rally a little bit more, like I've been saying. Resistance is 76.55. That's the first spot for it to stop rallying and turn down. And it's just simply getting closer. You got oversold. No particular signal at the bottom. That's about it. And Bitcoin, we caught the bottom with a bullish engulfing ERPI signal, and today's another new high. July 8th is the lowest low for the trend. I'll move this aside for the moment so you can see better. That's the lowest low. Big downside gap, two of them. Exhaustion weakness. I actually didn't see this. Just a cotton picking second here. I'm reloading to make sure everything's good. Yeah, it is good. Wow, you've got a kind of a double island here. I didn't see that until just now. So I'm going to put in another marker to separate this kind of price action. I got to tell you, this is even a little bit more bullish than I kind of expected to come up with because of this double situation. Let's put this back where it belongs, on the bottom, just a marker. And we're doing great with Bitcoin. Okay, have a great trading day. Profitable trading to you.